Welcome to Illuminati Silver. We tell the truth about silver. Today is Thursday, the 18th of February 2021, and we're looking at the implications of the US economy picking up as of the data released yesterday and earlier this week, and the implications potentially for gold and silver prices. So let's take a look. Now, yesterday we produced two videos, part 1 and part 2, addressing the question, is Bitcoin taking over from gold and silver as both a currency and inflation hedge? With Bitcoin now hitting daily new time highs, it even shot above $52,600 yesterday, while gold and silver have either fallen or languished. So it's an appropriate question to ask, even if it may just be a short to medium term phenomena. And we've placed links to both of these below. Now, the time of writing this video is 1300 hours GMT, and gold is down $4 at $1,784, and silver is up 18 cents at $27.23. And in view of yesterday's data, this is not really that surprising. Now, we've stated for a while that when we begin to see the economy pick up, we shall see a divergence in the gold and silver price, for obvious reasons. At its most simplistic, it's because gold, save around 10% of its demand, is a monetary metal, and silver, 50 to 60% of its demand, is industrial, and around 40 to 50% monetary. So as the economy improves, the monetary attraction usually dissipates, at least for a while, and the industrial component demand picks up. And this is what we're witnessing currently between gold and silver. Now, there are, admittedly, other factors at play, of course, but for the purpose of our video today, we just want to factor this one to be the most prominent for our attention. Now, earlier, Bloomberg came out with quite a large headline: US economy surges into 2021 as sales output tops forecasts. We'll just read a very brief excerpt for you. Quote, "The US economy started 2021 with a bang as retail sales and factory output accelerated, and expectations continue to build for another jolt of government stimulus, setting the stage for what could be the best year of economic growth in nearly 4 decades. Retail sales rose in January by the most in 7 months, increasing 5.3% after a disappointing December and beating all forecasts. Meanwhile, factory output rose by more than expected last month, and a measure of producer prices advanced by the most in records back to 2009. After a surge in COVID-19 infections curbed spending as 2020 drew to a close, cases have ebbed and states have started to ease some restrictions on businesses and activity. The ability to shop and dine out, paired with the latest round of $600 stimulus payments, helped spark retail sales gains across all major categories last month. Expectations for gross domestic product growth increased for the first quarter and every subsequent 3-month period through mid-2022, according to the most recent monthly survey of economists by Bloomberg News. Economic growth this year is estimated to be the strongest since 1984, when Republican Ronald Reagan was president. Other data from the Labor Department showed producer prices increased 1.3% in January, the biggest gain in records dating back to 2009, driven by broad-based gains in categories including energy and food. The core measure, which excludes energy and food, jumped by 1.2%, so 1.3 including it and 1.2 excluding it, also the most in records over the prior month. Rising producer prices have the potential of boosting the cost of living for households. A report last week showed the core consumer price index, a key measure of prices paid by US consumers, was unchanged in January for a second straight month, pointing to the pandemic's lingering restraint on inflation. A separate report from the Federal Reserve on Wednesday showed manufacturing extended its recovery in early 2021. Output rose in January by more than forecast, though it remained 1.9% below the pre-pandemic level. Also, Wednesday figures from the National Association of Home Builders showed confidence among residential construction firms improved slightly in February as the allure of low interest rates generated more prospective buyer traffic. Still, rising construction costs threaten to slow demand, unquote. So, some interesting examples of where the economy, at least now, seems to be recovering. It looks positive, but we're still awaiting the jobless claims report, which is due out in the next couple of hours, and we are perhaps expecting that to be quite positive too. But we'll have to wait and see when that's published. Now, the dollar index is currently down by 0.3 at 90.6. Equity markets in Asia overnight were broadly down around 1%, and UK and European markets are generally flat. Part of the reason perhaps is because a rising economy will probably now mean less need for additional stimulus, though of course the Biden package is still on the cards. The US markets have still yet to open though. Oil prices are continuing to rise, with Brent crude at $64.74 and WTI crude at $61.52. So what we're seeing or witnessing here is a high degree, or moderately high degree, of economic positivity. And this we actually envisage to be bullish for silver, though it's not reflected in the prices yet. Because firstly, it has to contend with any fallbacks as a result of investors moving towards more risk-on assets, like equities. Perhaps we're seeing gold prices somewhat soft, while silver prices are just managing to hold their own. Now, for those doubtful that the economy is picking up, or that retail sales are not as good as being reported, well, Walmart has announced better than expected figures this morning, though it is predicting lower figures next year. This is what Reuters reported. Quote, sales at US stores open at least a year surged 8.6%, excluding fuel, in the 3 months ending 31st of January, well above analysts' expectations of a 5.6% rise, according to IBS data from Refinitiv. So that's 8.6 compared to 5.6. Online sales rose 69% in the quarter, blowing past a 35% increase in the year earlier period, but slower than a 79% surge in the third quarter. The retailer has relied on its scale and strengthening online presence during the pandemic to attract new customers looking for a one-stop shop for their daily needs. Operating income rose 3.1% to $5.49 billion in the quarter, while adjusted earnings were $1.39 per share. Analysts, on average, were expecting the company to earn $1.51 per share. Walmart said it had incurred about $1.1 billion in expenses related to COVID-19 in the reported quarter, including higher wages for warehouse workers, bonuses for store employees, and costs related to keeping its stores clean. It forecasts fiscal 2022 net sales to grow, though, in single-digit figures, with earnings per share estimated to be flat to slightly up. Unquote. So ironically, its shares are down in pre-market trading, as it is forecasting a potential downtrend in growth, still growth nevertheless, but lower growth for 2022, simply because this past year has been so buoyant and positive for the store. Now, on the political front, for those interested, Wall Street hedge fund managers, the chief executives of Robinhood and Reddit, and a YouTube streamer known as Roaring Kitty face a grilling on Thursday afternoon, that's this afternoon, from US lawmakers, i.e. Congress, over the Reddit rally in shares of GameStop Corp. So we can see now the state lawmakers beginning to intervene in this, shall we say, rather innovative yet potentially cavalier sort of investor action. Be interesting to see how that actually pans out. So, going back to gold and silver. We still see a little further downward pressure on gold, but we're of the opinion that 1700 is very strong support and 1750 will offer a moderate level of support. And silver may still have a little downward pressure, but generally will hold its own until the manufacturing base really starts to motor. And then we believe this will be advantageous for silver prices, obviously for the months and years ahead. Do share your thoughts as to what you think is happening out there in the wider US economy, as well as those, of course, in their own countries, whether that be in Europe, the United Kingdom, Australia, New Zealand, etc., etc. And before we go, we just want to highlight that on a number of our Bitcoin videos, we are being spammed by either bots or individuals trying to promote a product. We've also come across someone who is pretending to be Illuminati Silver using our logo and is recommending, by their replies to people's comments, a particular website. Let us make it clear that is not us. We have removed them a number of times from the channel, but they keep changing or re-registering and appearing. So the only time we are promoting something is in our initial comment or in the actual text itself. But in terms of answers to questions, we are not pushing anything whatsoever. So if you do see someone pretending to be Illuminati Silver and say, go here, go here, go here, unless it's a link to a news item, then it's not us. Thank you, as always, for listening. If you haven't done so, please subscribe to our channel, not forgetting to press the bell sign so you're notified of our videos as and when they are published. We hope you have found this video interesting and informative, and if so, please give it a thumbs up and share it on social media. Please ensure that you have subscribed to our channel and press the bell sign so that you are notified of any future videos. Also, kindly visit our website at illuminatisilver.com, and if you haven't already done so, please subscribe either as a free or paying member for regular email updates and offers. Disclaimer: Illuminati Silver owners come from a background of banking, international wealth management and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.